Hello traders, you're welcome to this video. In this video, we are going to be looking at one of the nicest strategies. Well, it's not exactly the best strategy that can guarantee you profit. After all, no strategy at all guarantees profit, but I can say that it is an effective strategy that can assist you in your trading journey. And specifically, we are looking at a pullback strategy. Okay, remember that price does not move in a straight line, right? There are always pullbacks, there are always retracements. Even in a bullish trend, there's the reason why there is something called the corrective move and the impulsive move, right? So even in a bullish trend, you always have pullbacks. In a bearish trend, you always have pullbacks. So that is the reason why there is a pullback trading strategy. Okay, so whether you are new to trading or looking to refine your current strategy, understanding how to trade pullbacks can give you better entry points, better setups, and ultimately better trades. So let's get into it. First off, let's talk about what a pullback actually is. So a pullback happens when price temporarily moves against the trend, right? Basically, that is what a pullback is. So, for example, we can see that, let us look at a very practical example. We can see that we had a bullish trend around here, right? Because we can see that the price was making higher highs and higher lows, right? Higher highs and higher lows. So basically, this was a pullback, this was a pullback, right? This was a pullback. So pullbacks are, you know, there are price moves that happens against the trend within that trend. Okay, I hope I'm making sense. So in a bullish trend, when you have a bearish move, that is a pullback. In a bearish trend, when you have a bullish move, that is a pullback. Think of it as a momentary dip or retreat in an upward trend or a small rise in a down trend. It's not a reversal. It's more like the market taking a breath before continuing in the same direction. Okay, so why are pullbacks important? Because they offer you an optimized entry point. Instead of entering too early or after a big move, the pullback gives you a more favorable price to enter a trade within the trend. So for example, in this bullish trend, pullbacks give you favorable points to enter a buy trade. Okay, because this is a bullish trend, so it's not really good for you to enter at a high price. Okay, and for the fact that price does not move in a straight line, so had it been you had identified this bullish trend, let's say when the price was already here, it will be better for you to just wait for a pullback before entering a buy position instead of entering a buy when it is already almost at its pullback point. Okay, so pullbacks give you, good points of entries, okay, in the direction of the trend. One of the first skills you need to master with this strategy is knowing how to distinguish a pullback from a reversal. Okay, a pullback is a short-term move like the ones we have here, you can see, while a reversal indicates a long-term change in direction. Okay, so how do you tell them apart? One way is to look at the strength of the pullback and confirm it with indicators like the moving averages or the RSI. So we are going to be adding the moving average to the chart. We're just going to use the 50 EMA. Okay, so now we can see that this was a bullish trend, right? We had a bullish structure, and then these were just pullbacks. But then at this point, we can see something that is looking different from a pullback. So it is possible that a bearish reversal is starting. It is very, very likely because we can see a very long move breaking out from the bullish trend that we are initially having. We can see that this is the dynamic support, and it has broken out of it already. And we even have a retest. You can see even the moving average was serving as a dynamic support, and the price broke out of it and even retested it and continues coming down. So this is a reversal sign, whereas these ones are just pullback. So I hope I have differentiated them effectively. A pullback is not going to move far away from the breakout point, because from this example we can see that the price was breaking out of the moving average. You can see it was going below it, climbing above it, and all of that. But in the case of a pullback, it won't go far compared to what happened here. right? It won't really go far. And even if it does, for one reason or the other, maybe there was a news event or something, fundamentals can actually affect, the distance that as the candlestick will go. But a pullback will not retest and continue in that direction, like what happened here. A pullback will respect the structure. In the bullish structure, in a bullish trend, the pullback will respect it, okay? But a reversal will not exactly respect it, okay? So if you see a pullback touching, the dynamic support and resistance levels, then you know that the pullback is actually valid. But when you notice that price is breaking out of the dynamic support or dynamic resistance, then you know that that is possibly a reversal and not a pullback anymore, okay? Now, once you've identified the pullback, the next step is setting up your entry and exit points. So let's say that we are in an uptrend, as we can see here. As the price pulls back toward a support zone, okay, we can look for a confirmation candlestick pattern, like a bullish engulfing, or any other candlestick pattern that forms, right? Just, or a bullish candle, maybe a prominent bullish candle that forms around that dynamic support. That's going to be our entry point. For example, we can see that we had something like a pin bar here form after price touched this dynamic support. So that would have been our entry point. Now for exits, you could aim for the recent high, or you could just use a trailing stop loss to let the trend run further. Okay, so once we enter after this candlestick pattern form, then if we have already established the channel, then you can just use the dynamic resistance to exit your buy trade. Yeah, very easy. Okay, so a few final tips. Patience is key here. All right, wait for confirmation instead of rushing in, and make sure to use appropriate stop losses. When you enter a trade, make sure you set your stop loss just below the support for a buy trade, above the resistance for a sell trade. Okay, it's very important. One common mistake is setting stop losses too close. Okay, so you should give some pips below that key level. The key level is the support and the resistance level. Those are key levels. So give some pips, below the support for a buy, some pips above the resistance for a sell. All right, and that's a wrap on the pullback trading strategy. If this video helped clarify your trading approach, go ahead and hit that like button and subscribe for more videos like